Okay, let's go ahead and start booking transactions for the month of February. Here we are. Our first transaction is paid with a credit card. So let's go ahead and pay it with our expense module. We're paying food traders. All right, here we are, paying with our credit card. The date is 2/12. Okay, method credit card. Reference, we're going to use our invoice number. Okay, food purchases. Okay, it remembers the amount from our previous transaction, so we got to make sure we modify that. All right, we can also post the invoice number into the memo. Okay, and what do we have from standpoints of debits and credits, right? Well, we know that we are borrowing money, right? Because we're purchasing supplies, but we're borrowing to purchase those from the credit card, right? So our liability goes up. Liabilities go up when credited. All right, so here we are, and we also know that our expenses on food purchases go up, and expenses go up when debited, right? So account 6200 is debited, therefore this amount right here is a debit to this account, and this amount, which incidentally is this amount as well, is a credit to this account 21100. It increases the liability. So here we are, saving new. All right, let's continue. Next, we have another credit card receipt. Okay, excellent. So we are going to go and pay to-go packs. All right, and still we're paying with the credit card. Make sure that we reflect the date we paid it, since we're doing it post factum. All right, reference number. Here we are. We're going to continue using that in the memo box, and it remembers that those are our restaurant supplies. The amount went up a little bit, so let's make sure we change that. Okay. All right. So again, what's going on in terms of debits and credits? Again, we know that we are borrowing, right? So our liability goes up. What else do we know? We know that our expenses are increasing, restaurant supplies, right? So they go up as well. So here it is, right? This amount right here is a debit to this account, and this account is an expense, and debits increased expenses, right? And this amount is a credit to this account, and this account is a liability, 21100, right? So here we are. Let's go ahead and book it. Okay. Next one is a check, but you know, just for diversity reasons and just to demonstrate that there's many different ways, as long as you know your debits and credits to book a transaction, let's stay in this module. Let's not go to the write a check, and let's book everything out of this module. And again, we'll see that at the end of the day, when we reconcile, we will be successful, right? So again, as long as you know your debits and credits. So again, what do we have here? We have our clean depot, but in this case, again, we're not using the credit card, right? We're using our bank account. All right. So again, the date. All right. Check. Here it is. We're going to enter our check number. In this case, okay, what's category? We have cleaning supplies, right? So here they are. And here we can, in description, we can enter our invoice number, because in the reference box we ended up using our check number, and again we can enter it in the memo. So here we are again. What's going on in terms of debits and credits? Well, we know one thing for sure, right? Once the check clears, our bank account balance will be reduced, and bank account is an asset, and assets reduce when credited. So here we are. What else do we know? We know that our expenses are going up, right, on cleaning supplies, and expenses go up when they're debited. Okay, so here we are. This amount right here is a debit to this account, and this account is an expense account. It goes up when it's debited. And this amount is a credit to this account, and this account is an asset, right, and it goes down when it is credited. So here we are. Let's go ahead and save in new. Next one is a credit card. Again, we're going to stay in this module. Okay, again, make sure we change to our credit card. Okay, we're going to use our invoice number. Here it is, and it's drink purchases. Excellent. Okay, let's make sure we make the correct entry on the amount. All right. Okay, so here we are again. What's going on? Well, we are borrowing, right? We're borrowing money, so our liability goes up. Okay, what else is going on? Well, we're spending money that we borrowed essentially on supplies, so our expense account goes up as well. And again, debits and credits are in balance. Here we are, right? This amount is a debit to this account. This amount is a credit to this account. Right? So let's go ahead and continue. Next, we have utilities invoice that we paid, and we paid it with the check. Again, we're going to stay in this expense module. Why not, right? We're in a catch-up mode. We might as well. Okay, make sure you select the correct account here. All right. Okay, we're going to enter the check number for reference. All right, what is the category? Utilities. All right, and here we can enter the invoice number. Okay, now we can also enter it here. Okay, 756. So what's going on in terms of debits and credits? Well, again, we know that our bank account will be reduced, and it's an asset. Assets are reduced when credited. Utilities is an expense, and expenses are increased when debited. And makes sense, right? Again, we're parting with money in our bank account, therefore the balance goes down and it is credited, and we're spending money on utilities. Utilities are expenses, they go up and they're debited, right? So here we are. Okay. We have a big lease invoice that we're going to pay, and that one is paid with our bank account. Okay. Make sure we enter our check number here. All right, so this one is a little bit more complex, right? We have our rent, $1,000, and we have our insurance, okay, 150. We have our registrations and such, 50. Okay, we have our maintenance. Okay, 75, and then we have our advertising, right? That's for the artwork on our food truck, so we're not paying it all up front. Since we're leasing the truck, we're kind of paying for the artwork over time. Okay, so let's enter invoice number for reference, so we know what document we need to look up if it comes to it. Okay. So here we are, right? What's going on in terms of debits and credits? Well, our bank account will go down, we know this much. And bank account is an asset and it goes down when it is credited. Okay, and then we have a whole bunch of expenses, and expenses go up when debited, and therefore we will basically post them right here because debits need to equal credits. So here we are. Voila, right? And debits and credits equal to each other. These are our expense accounts. They go up when debited. This is our bank account, right? And it's an asset and it goes down when it's credited, right? So makes sense, right? We are paying with money from our bank account. Expenses go up, balance in our bank account goes down. Okay, we're done with booking invoices. Next, we're going to move on to booking receipts. Okay, let's move forward with booking receipts. Again, we can stay in our expense module, no need to leave, right? So we have our receipt from gas station, and we just got to make sure it remembers. QuickBooks is smart, it's learning, so it remembers that this is a credit card, or somehow it just figures it out, I don't know, but it tries to be helpful. Okay, so reference number. Okay, here we are, fuel, yep, okay, just make sure we update the amount. We can post it right here. Again, what's going on in terms of debits and credits? Well, by now we know, but let's make sure we solidify. We're borrowing money to purchase some fuel. What else is happening? Our fuel expense is going up. So again, debits and credits equal to each other. This amount is a debit to this account. Expense account goes up when debited. And this amount, right, it's a credit to this account. It's a liability account, right? It's a credit card account. So we're borrowing. So our debt is going up. All right. Save and new. And here we are. Next, we have another one of those. All right. Credit card selected, great. And 225, 2020. Okay, credit card, reference number 430,977. Fuel expense, make sure we update the amount. Okay. Here we are. Again, what's going on in terms of debits and credits? Same just like before, right? We're borrowing. So our debt is going up. That goes up when it is credited. What else is happening? Well, we're spending money on fuel, so our fuel expense goes up. Again, debits and credits equal to each other. This is debit, this is credit. These are the accounts, right? We know it. Save and new. Okay, what else do we have? Oh, all right, we are paying for our cell phone service, data plan and such. Okay, that's great. Let's do that. Mobile, again, we're paying with the credit card. Make sure we select the date correctly. All right, here we are. Okay, that's our telephone expense, right? Okay, great. Let's continue with that. Amount is 174. Okay, good to go. Everything looks fine. Again, we know the details. Let's just switch it up for kicks and giggles. Expenses go up, so they have to be debited, right? What else is happening? Well, we're paying with a credit card, right? So our liability goes up. It has to be credited. So here it is. All right, let's move forward. Okay, next we have a transaction receipt. That's a payment that we made, right, to pay down our credit card. We can't do it in this interface, right, because as we already explored, this amount, this amount, once it shows up here, it will be credited towards the liability account. And although we, well, let's see if we can do that. If we have the credit card receipt right here, do we? Yeah, we do. Okay, yeah, we can actually achieve it, right? So again, what's important here is to remember where are your debits, where are your credits in each interface. And if you do it, you'll be successful at booking any transaction regardless of how you do it. So let's do that, all right? So again, we're paying down our credit card. So we're paying to the credit card company, credit first. Okay, we're paying it on 215. That's already here. We're paying it with our bank. Let's see, let's call it transfer, bank transfer. Okay, save it. And 545613. Okay, credit card, great. Okay, so what's important here is that even though we're in the expense module, right, we're going to book a transaction where we're paying down our credit card. There's, again, QuickBooks Online has a special button for it, and we will use it in the following months as we book it, just to demonstrate, again, debits and credits behind each interface. But it's important to show that even in this interface, expense interface, you can book transaction because you know your debits and credits. So let's get it done. All right, so here we are. What do we know? Well, we know that in this interface, this amount right here, okay, hold on. This amount right here is going to be a credit. We learned it, right, from previous observations. What else do we know? We know that this amount right here is going to be a debit, right? So here we are. Right, so this amount is a debit to this account, 21,100, which is a liability. Liabilities are reduced when debited, and that's what we want. We're paying it down. What else is happening? This amount right here is a credit to this account, 11,100, right? Which make perfect sense, right? Because we're paying with money from our bank, and therefore our bank balance will be reduced. And they, being an asset, it's reduced when credited. So let's go ahead and book this transaction. Okay. And now we're going to move forward with reconciliation to show whether or not, our knowledge of debits and credits proved itself.